The war on the US dollar and by default, savers is well underway. What does it mean? What does it mean for gold? What does it mean for silver? And what does it mean for the future of fiat currencies globally? We're going to be discussing that today with my good friend, Mike Konnert. He is the CEO of Vizsla Silver, which is traded on the New York Stock Exchange, one of my favorite silver mining stocks and one of the sponsors here on this channel. So we're going to link the Vizsla Silver website right there down below. And we want to welcome you back to another episode. Thank you for watching today. If you enjoyed today's episode, make sure you hit the like button on this video, subscribe, bell notification to get notified for new episodes. You can give us a comment down below. This is Go Silver Go. And Mike, it's good to see you.
Great to see you, Jake.
So we're in pretty interesting times right now. I was talking to Rick Rule last week, and I was pretty surprised because Rick's always one of the more optimistic guests. And he said, he was saying more so than ever, he said we're closer to a psychological failure in currency for the masses. And he said, one thing that's different between previous times of his career, for instance, in the historic 70s commodities bull market, is he said that the debt is just so much bigger than before. He never worried about, well, is there going to be a currency collapse? Now he's looking at it and he said, we're in an entirely new landscape today. What do you make of it?
Well, it's, certainly over the last few weeks has been a pretty harrowing experience. I think this is just the beginning, perhaps, of a broader market pullback, and the U.S. dollar having some trouble going ahead here. But it's a great time, I think, at least, to be buying the precious metals, equities, and metals, on sale. So Rick also says, a market that goes down 40% is exactly 40% more attractive. I'd argue that statistic has been applied to Vizsla's shares here recently, and they've become slightly more attractive than perhaps they have been. But these times are always a bit difficult. But I always remember, these times, we're having, all-time highs and exciting times in the shares too, because neither of these things last forever. It's never, always up and always exciting. It's never always down and always menacing. So, from my perspective, a little different, I suppose. I'm just focused on making our business better, making the project better, doing what I can control. But you know what? I think we're heading into a period of time here where it's going to be very important to hedge yourself with precious metals and the equities.
One of the bizarre things about it is, right, so inflation going out of control. To me, it feels like what the Fed is doing is, since we're so far away from natural market forces, to me, it feels like they're almost trying to force a correction just so things aren't going hockey stick infinitely higher and higher and higher. But one of the bizarre consequences of what's occurring is when there is more pain and the CNBC pundits start going, oh my gosh, do something, do something, do something. The only thing the Fed can do in a result like this is just print more money when we already have these incredible supply chain disruptions, calls for food shortages, and inflation that obviously, even though they're saying, oh, we're going to raise interest rates by 50 basis points, it's not going to affect inflation. At this point, all it's doing is just scaring the stock market. But then the result of that is we're just going to print more and more and more money. Do you see this trend changing, and where do you think it goes from here?
The only thing I see that they're going to change about money printing is what they call it. In the future, it'll just be something else. But we've seen this movie before, right? They just changed the name. So no, I think we're in this modern monetary theory world now to stay until something cataclysmic happens, and there's a real shift to real money, hard money, and the problem is as well is if you're a lot of these commodities like oil is being traded in U.S. dollars, we're in a situation here with adversaries of the United States, um, all around the world now thinking, well, gee, do I really want to have my proceeds from selling oil in a currency where they can just go seize my yacht or seize my accounts or so I think we're going to see a lot of these countries like Russia move to a gold backed currency or actually to other commodities to take payment for natural products. So it's really something I didn't have necessarily on my bingo card for this year. What we've been seeing going on, but I tell you, it does make me really want to own more of these metals and be more secure. And then, of course, like I said, they're going to change the name of money printing or stimulus, but I'm sure that they're going to be investing money into infrastructure and projects that are going to use these metals as well too. So all in all, it's a bullish picture, I think, for the metals.
Wonder that was funny. I didn't think of that. I wonder what they'll change the name to. Maybe they'll change it to anti-exclusivity easing. Anti-exclusivity. What will they change it to?
Well, I don't know. It's like Orwellian newspeak, right? So just whatever the opposite is, I guess freedom printing or something.
Yeah, I like that one. Yeah, on that subject, I had a guest on. I forget who it was. It was long before the Ukraine and Russia situation even happened. But the guest was mentioning how people don't understand that all the previous sanctions against Russia actually allowed Russia to have arguably the strongest balance sheet out of any country in the world. They have, of course, a lot of energy. They have an incredible amount of commodities, of gold, as does China. And then you look at the current picture right now, and it's hard to argue that this type of geopolitical instability, or I guess what some will call a de-globalization, or you could say a de-Westernization, it's hard to argue how it is not over the next decade going to be extremely bullish for precious metals when the result of all of this is just going to be more US dollar printing. And as more of these countries with energy are seeing what Russia's doing, we saw Saudi Arabia refuse to answer Joe Biden's phone calls. At some point, it seems like you're going to see a stronger move to balance trade in precious metals, even though it might be very turbulent in the short term. Do you agree with that? Or how do you make of this current geopolitical landscape and how it fits into the larger movement towards precious metals?
Yeah, well, I think anytime you have this type of systemic shock to global trade paradigm, I think you're going to see people want to fight to safety as well too. And one of the interesting things is that Mercer, which is one of the the world's largest fund managers, advisors to fund managers, has indicated to their their advisors that they need to be putting a 5% weighting into gold. That's huge news, right? That's something for some reason we haven't really heard of it. This is something I heard from a friend of mine. But you think that would be headline news for everybody, but I think it's getting closer and closer to the point where this is the shocks that we're seeing all throughout the world are going to kind of force even people that were laughing at gold recently, and of course by gold, I'm talking about gold and silver, to have that as part of a portfolio to protect from these global supply chain reverberations and shifts. So, have you ever seen a stranger time out there with pandemics kicking up again in China? These potential for serious war in in Europe. And strange that the U.S. dollar, is doing so well versus gold. And I don't think this is something that we're going to see be sustainable. I think it's something that's happening, in the short term, but long term, I couldn't see a more bullish picture for gold. And I think there's going to be another, they call it a black swan event because we don't know what it looks like yet. But I think we're going to see something like that, occur in the future here. That that'll be that kind of final straw for people not to have gold. That it'll drive people into the safe haven trade, and we'll start to see these prices reflect what's really going on here, which will be fantastic.
One of the possibilities that was floated out on my channel was by Keith Neumeyer, and he said that he thinks a resetting of precious metals pricing could occur from tech companies and industry companies that circumvent the traditional markets for metals, and they go directly to miners and essentially build a new streamlined system for supply and demand, especially due to the fact that all of this paper selling distorts not only the price, but it allows, as you know, as a miner, a lot of mines can't come online, even though they're needed due to the incredible amount of lack of investment into infrastructure and mining. Do you see something like that occurring? And in this theme of supply chain disruptions, whereas maybe the supply chain disruption, of course, we've all seen the maps of all of these ships that aren't being able to get into Shanghai. Maybe you don't see that as much in a traditional lens of silver, but there is the same type of disruption that occurs when price is manipulated for an extended period of time that doesn't allow new mines to not only come online or be invested in.
Well, to Keith's point there, I think that's absolutely possible, and I think it is starting to happen in kind of its early form. One of the things that's going to lead to that is just distrust with the LME. I mean, we saw that with nickel recently, where they basically unwound a bunch of devastating trades to the Chinese billionaire and Chinese group that was kind of behind those trades, and the net effect really was that I lost confidence in that. I think it's just we're starting to see the cracks in that LME paper trading system, and like we all know, and I'm sure your audience knows that you can't buy an ounce of silver for less than $30 now, at least on a website or anything like that. I saw the 100-ounce bars still at a metric of $30 an ounce US. There is a disconnect between the futures paper price and the real value of this metal. Now, I really do see the potential for automobile companies and end users to go down, down the supply chain to the miners, and I say that because I've already seen that happen with a company, one of the first companies that Craig and I started. Cobalt One, we sold that to a company called Blackstone. Blackstone's working with LG Chem, I believe, and Korean battery manufacturers to bring a nickel mine online in Vietnam. They've invested, they've supported. We're seeing that all around the world. So it's just a matter of time before this happens. For silver miners, maybe Elon will come and knock on Key's door soon, and then shortly after that, he'll knock on ours, and we'll be happy to provide SpaceX and Tesla and Solar City and all these companies with the silver that they need. But it's not really for me a question of if, it's more of a question of when.
Yeah, that's a good point with regards to the cracks of trust, which is a theme that we're seeing across the board, right? There's cracks in trust in mainstream media, ratings lower than ever. There's cracks of trust in the general financial system. They said there's no inflation, then they said it's not bad, then they said it's actually good for you, and they're saying money printing doesn't cause inflation. Then you see what happened with the nickel market. there's a general theme of a growing psychological distrust, which isn't exactly the environment you want, but when you're preparing for it, when you're hedging for it in something like metals, that's where the movement begins to flood into, right?
Absolutely. I mean, it's you're right. Unfortunately, and sadly, uh, the environments you want to be in aren't always the ones that help silver and gold go up. Yeah, we saw that in 2020. It was lockdowns and a pandemic that sent the price rocketing from a pretty severe crash. I remember that March 2020 crash where everything was selling off gold and all these juniors and even senior mining companies, Tech, Agnico. And then all of a sudden, they catapulted from those lows. And, those of us who invested in that and went all in, which I did, we made a fortune on that trade. I think I've seen something similar happen here as well now, where, we're getting a broad market sell off. It's affecting companies like Vizsla and other companies out there. But it's creating an artificial low that creates a huge opportunity to buy the stock. I think just an incredible time here. But really what drives that is a lack of trust, and when you're a Main Street investment advisor or Wall Street investment advisor, and your Netflix pick and your Google and your all of these companies that were the FANG, that were the kind of the cornerstone of your account are down 30%, or if you had some more clients that had a stronger risk appetite, and you said, why don't we go long all these SPAC IPOs and buy them in the aftermarket? You're down probably more than 50%. These were the darlings of the market 2 years ago and a year ago and up until recently. And so, that trust is breaking down. And when that happens, people go back to kind of brass tacks. They go back to what they know. And, there's probably going to be some memories, some echoes in their head about, gold is a safe haven. Now, people might say that there's a bit of that trade that's eaten up by Bitcoin. That might be true, but I think the world's big enough for gold primarily, and some people may like Bitcoin as well. But I really do think there's going to be a flight to that safe haven trade here shortly.
Um, you and your team have been very successful investing in mining stocks. Your partner's been very successful in the mining industry. Let's talk about the mindset in an environment like this. One of the I think issues for a retail investor in mining stocks is a very short-term horizon. Whereas when you actually own a mine like you do with Vizsla, you're not looking at 12 months, 6 months. You're looking at a decade movement. What is the mindset to succeed as a mining stock investor in this environment? How are you guys applying that with Vizsla, and how can that parlay back to someone watching this?
Well, in addition to being the CEO of Vizsla, I'm also I've been investing in this in this space for quite some time, well over a decade, and I'm an active investor as well. And it's really tough to watch your stocks get hit on days like today, but and last week. But you know what? It's all about a flight to quality as well. So if you have a quality asset within a team that has quality management and the ability to raise capital, I think you'll be successful. And one of those, you brought up Craig's and track record as well, but Next Gen Energy was a good example of that. I think it was trading under $1. I'm pretty sure it was trading under $1 after that crash in 2020, and now I think it's a $9 stock. So, even in the very short term, some of the best assets can be sold off. But I think that's an opportunity to buy more if you have the cash, or to trade out of your weaker names into stronger names. And a company like Vizsla that has over 100 million ounces in resource there. It's a true district. It's well financed, well run. This is something that's going to last the cycles. So I think that's a top pick. From my perspective in terms of silver exposure. But you know what? It's really about zooming out and keeping a view on the longer term, but also backing the positive management teams and assets, but also not panicking. The hardest thing sometimes to do is not to sell off into these crashes. So, it's all about keeping a calm mindset and doing what you have to do that, exercising, meditating, things like that. But don't panic.
So let's talk a little bit about Vizsla. Any updates? Where are you guys at right now, and what's the goals moving forward?
Yeah, we're in an excellent position. We have 13 rigs turning on the property. A team. We've just brought on a new vice president of exploration who's looking at the district in a new way, which is very exciting. So I think new discoveries are going to be driving value for us going forward. And then we move into that production phase that I know you and your audience are quite excited about. We're working on that as we speak here, and moving through the permitting hurdles, looking at trade-offs on how to basically build the best production facility for for this project. But I think it's really clear to me that this is going to be a very large long-term producer of silver and gold in Mexico. What we've seen more recently is leading us to believe that this is going to be one of the largest, exploration projects moving into production. And what I've also noticed is that the quality silver names are really starting to get whittled down to just a small group. And I think that the future for those names is very bright, especially when we're talking about the potential for offtake with end users and moving away from this kind of manipulated paper market pricing for silver.
Yeah, I say it a lot, but it's the independent speculators term. He calls it the pre-production sweet spot, where the production's coming and there's a revaluation in that process. Let's talk a little bit about a valuation of a mining company. In that, let's say a company has 100 million ounces in the ground. We'll just use Vizsla numbers for that. And let's say silver's at $25. What type of movement do you see in the valuation of a company that is not mining, or they are not producing, and the price of silver goes from $25 to $33? What type of movement or revaluation of a company do you see in a process like that?
Well, I mean, first of all, for us, our metric is that we're finding an ounce of silver for 23 cents. So it costs us 23 cents for every ounce that we find in exploration. That's not only exploration, that includes, management salaries, includes the pencils in the office. It's not just real money. So that's extremely capital efficient. So first of all, we're finding silver for less than a quarter. Generally, that gets valued in the market, at about $2 to $3 for us. For our comps, it's about $9 to even $10 an ounce US in terms of enterprise value. So, first of all, even if silver doesn't move, I could see, first of all, Vizsla's finding more silver. That resource is going to go up. We're moving towards a higher value per ounce compared to our comps as well. So there's even in this current state, there's a number of methodologies for us to re-rate and go to a higher share price just based on that. Now, if we do have a move in silver, of course, the margin would go up, the projected margin on what we're going to be producing here. So if it costs us about the same, you could look at other companies in Mexico, and let's just say that they produce an ounce for about $6 to $10. $10 on the high side, $6 on the low side. Every dollar improvement on the silver price is added margin, quite a significant added margin. So, if you're first of all, if you're Visa and you're finding silver for 23 cents an ounce, you've got 13 drill rigs turning the biggest exploration program in Mexico for precious metals, by a junior, and you're finding it for that much. You can get it out of the ground for between $6 and $10, let's say, based on comps in Mexico. Movements in the price of silver are just fantastic, and it helps you get re-rated. It helps you re-rate on your economics in terms of studies. And when people are optimistic about the price of silver, the value of these equities go up, quite significantly. So I wouldn't be surprised to see multiples in share price value here for Visa in a rising silver environment. And in a flat silver environment, I think it's going to go up multiples as well because of the potential to re-rate on an EV per ounce basis, as well as finding just loads more silver here.
I have a really smart guest that comes on, maybe every quarter or something like that. His name is Don Durrett, and he said something interesting. He said that he didn't expect the prices of precious metals to move until fear re-entered the market. And this was, I don't know, maybe it was 6 months ago, where, everything was still doing like okay. And people were calling for higher prices in silver and gold. And he said, there has to be more fear first. And now we're kind of, not kind of, we're re-entering that. And in addition to that, it is abundantly obvious that the only thing they're going to do is print more money. Now, as a father, I have to say, I don't love this type of social, political, and economic instability. It'd be nice if it wasn't that type of environment. But I have to say, if we're headed for an all-out war on currency and an all-out war on social and economic normalcy, I'd prefer that it expedites. I prefer it just happens, as opposed to just like, maybe they'll just keep printing it. Maybe they'll just kicking it down the can. And we're getting there. It's like a weird paradox of optimism and doomsday at the same time. But I think on the other side, as more and more people keep waking up, because I feel like that's happening. Like when you didn't give a crap about what the Fed does, how much money they print, who gives a shit? I'm just living my life. But then all of a sudden you see gas is $6 and you see your thing that you buy is another $3. It starts to pop a little few question marks. And I feel like we're getting to this point where, when people, as Rick said, really realize what's happening, there may be like a really bad period, but I do think it's optimistic on the other side socially, and hopefully that ultimately people demand sound money on the other side of it. But this type of instability and fear is also, I feel, to echo what Don Durrett said, will be bullish for commodities mining and people that are looking to participate in this wealth transfer. What's your thoughts on that?
Yeah, absolutely. And both these bull markets happen, when the least amount of people are looking at it, basically. So, we'll when it's the most hated thing, which we're getting pretty close, it feels pretty hated right now. You can see that shift and that move, right? And then it's the momentum of people coming into a trade that really makes the difference. So, it's hard to do if everybody loves it already, right? Remember when Bitcoin was going up and everyone said, 100,000 and it was going to move and it was going to be this, it was going to go to $1 million a coin. That's when everybody's eyes were on it. It was the coolest event, the Miami, whatever Bitcoin conference that definitely hasn't happened for mining. If we had a Miami mining conference, I bet maybe the same 100 people that go to these conferences would show up and, that would be, so it's totally unloved now. We need to get through that fear event, that major event. And that's what I was referring to, I think, with the black swan. There's going to be something, that kind of triggers that, and like you said, pulls the band-aid off, and moves us to this next leg up, this next kind of step change or shift in pricing of these assets. And from that will come the waves of new interest. We haven't even had this wave of fund flows into these metals funds yet, and we certainly haven't had any new analysts hired at generalist funds to cover mining. It's just totally unloved. It's a great place to be, and you want to be there before it is loved, right? It's just you want to be early on these things. So it's a very exciting time to be in this space. It may not feel like it all the time, but it is.
Beautiful. So we want to thank you for watching today's episode. Where do you think we're going from here? You can let us know in the comments right there down below. I'm going to link the Vizsla Silver website right there down below. They're traded on the New York Stock Exchange, actually moving up in the world. Is that right, Mike?
That's right. Yeah, NYSE, VZLA, and Canada, VZLA as well.
So let us know what you think. Where are we going from here? Are we going? Are we going into the financial apocalypse? Or are we going into the next level of bubble blowing, or somewhere in between? You could let us know in the comments right there down below. As always, I want to thank you for listening to today's episode. Hope you got something great out of it. If you did, make sure you hit the like button, subscribe, bell notification, all that good stuff. I want to thank you, Mike, for joining today. And we want to thank you for listening. So thank you, Mike.
Thanks, Jake. It's great to be here, and talk to you soon.